We talk about this a lot, but repetition is how you get good and how you stay good. Take a look at the first illustration. Just there's a rally, let's say you missed it. Then you look for a pullback to some area of support and another leg up. So you're trying to buy a pullback. You're bullish. So that's ready. You're looking for support. That's aim. Then what? For fire in a ready aim fire progression. I'm going to show you. Here, as you can see on this chart, market's retracing back in. This green line, this green dotted line is an average, the average price people over the last hour are long from. Could be support, generally is. Well, what are you going to do? Just put a bid there? Not going to work to just lay bids to get long and offers to get short. You could take a shot when you see a blue triangle, which is showing you an imbalance. You could take a shot when you see a pink triangle get breached or a second blue triangle or all the above. Take a look at the green laser, which is green coming down, which it normally would be. It shrinks and goes red, which means it's flipped from more longs in the market to more shorts in the market. It's bullish when that happens. When you get blue triangles, that's bullish. When you get a pink triangle that gets breached, meaning price gets above a pink triangle, that's bullish. So you get a little bit of everything. Look at this moment. It turned red right there. That's pretty close to the bottom of this move. Look how quickly that pink triangle got breached. That's showing you that you're right. We say this all the time. Price is going to be the first thing to tell you you're right or wrong after you open a position. And so that's trigger. And that's generally what most people never, ever get good at is fire in a ready aim fire progression. And everybody could break down their strategy, whether you do it or you don't. It can be broken down. A lot of people don't look at it that way. But if you did look at it that way, you could break down any strategy and every strategy into a ready aim fire. Ready is, hey, what's your opinion? You have one? Think it's going up or down? Aim is you got support resistance, and fire is what? Many people could answer the ready and the aim question, but they don't have good tools to address the fire, the execution, when to click, when to get in, when with the probabilities of it going now. Because the definition of a good location is price goes your way ASAP. That's the definition. The definition of a good location isn't lower to get long and higher to get short. No, that could be irrelevant. I don't care what the price is. It's how long does it take to start paying you. So therefore, just for example's sake, 95 to get long is not always better than 97 just because 95 is lower. If the market came down to 95 and it did this, and then went to 97 and did that, you're better off getting long the 97s in here when you've seen something to trigger because it didn't take long to pay you. Then getting long over here at the 95 and have to deal with all this, which is going to create all kinds of self-doubt that you're too early, that you're wrong, and everything else. But this was the rally. The first 60 minutes in this particular session, if you're watching it in the future, had a nice 50, 60 point rally. And what's important is what, first of all, could keep you from getting stuck short. Let's back it all the way. There were a couple clues early. Take a look at this one right here. Comes in and out. The double pink breach. Well, first of all, you had this breach right here. You had these two pinks. As soon as the blue came, boom, it popped. Where was the double pink? Right here. This was another clue where two pinks come in on top of each other, and it still can't get price to go lower because buy market orders must be coming in because that's what makes price go higher. Buy market orders. The limit orders is what we're filtering to first identify which orders are real and which ones aren't, and then comparing them to each other, buyers versus sellers, around the last traded price. And when there's a decent enough an imbalance of more sellers who want to sell it versus buyers who want to buy it, you put a pink triangle. when it's greater than 250. And we could adjust that. But 250 we found to be a good number. And then you got to read price then. But you're seeing real imbalances come in. So what should happen when there's more people who want to sell it than people want to buy it? It's bearish, the price of anything. Okay, good. But what if it's not? Meaning, what if it doesn't go down? That's sometimes a better clue. And by the way, just because you have more people who want to sell it versus people who want to buy it, those are passive. Limit orders are passive. It's the market orders that always move us. So if there is a big imbalance of passive sell orders that want to sell it, and a bunch of aggressive buy orders that say, well, I'll buy it. Fine, give it to me. Give me more. I'll take it, take it, take it, take it. That's what happens. If there was audio put on this, that's what it would sound like when the price moves up. Buy market orders are coming in. And so once you cannot go down, and you should, that's a bullish clue. But you need tools to tell you what it should do and be pretty accurate as to what it should do. And then you ask the better question, well, is it doing what it should do? Great detectives, and there are not many great detectives out there in law enforcement, but the real good ones, they're just looking at simple expressions. They're not lie detectors, not human lie detectors. They're just good at understanding what should happen versus what is happening. That's a clue. What should happen versus what is happened is a clue. And so, last thing we talk about is when we had this transition, you had a market that rallied 60 points and then came down. Not that it came down aggressively, but what it did is it came down and went through an area that it doesn't generally go through. Going back to what I said, did what it normally doesn't do. It goes right to our support and rallies. But then look at this next attempt. It goes right through our PWAPs. Well, damn it, when you have good support areas and they don't work as support, that's a clue that now the market might be transitioning from bullish to bearish. And you could see that in real time instead of having to wait. So take a look at, now it used the PWAPs as overhead resistance right in here. Laser went green, pink triangle right in here. Laser turned green, couple bars, green, 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 all the longs getting stuck. That's what you want to see if you're short. And then a pink triangle came in. So if you're bearish, there should be no excuse of not being short somewhere in this area right here. Not at the very top, but somewhere in here. When you see green laser and you see pink triangle. And then what do? Let price tell you if you're right or wrong. And what's the definition of good location? Trade works sooner rather than later. And this then became the got weak and weak, got weak, weaker and weak, and totally was on its way to taking back almost 100% of the rally that we had in the first 60 minutes. So remember, you need tools that tell you what should happen, and then ask better questions like, well, is what should happen actually happening? And if the answer is no, it's not, you're going to read the market much, much better.